Okay, listen, I got a secret to tell you. You ready?
It's free real estate.
Your money is not your own. Welcome back to NGMI, the show where we talk about lessons that we learn building our very real accounting firm so that you can also learn a lesson as we learn it together because we're all learners here. That's the show pitch. So today on NGMI, I wanted to talk about something that very few business owners seem to grasp, and that is that all of the money that you earn in your business, it's not your money. But before we get into that, I need you to do 3 things. Like this video, hit the subscribe button, and leave a comment about the thing that you like the most. Me. Okay, so when I say that your business's money is not your money, it's not actually. I mean, that's just like not the full truth. The full truth is that really it depends. If you have a business that you're running and you're doing a great job and you're making money, chances are it's probably your money. And this is the case in most business structures, right? If you have a sole proprietorship, if you're an LLC, typically the money that you make is just gonna flow into your personal tax return. But philosophically, a lot of people see their business as an extension of themselves. The money that the business makes is no different than the money that they have in their personal checking accounts. And that is just, it's not true. I think that your business should have its own money and that your personal life should have its own money and that the two things should not be intermingled. And so does the IRS, but I'm not here to tell you those things. Conceptually, I'm just trying to say that it's your business's money. It's the thing that your business has earned, and until it's taken out in the form of profit or in the form of wages to go into your bank account, it's your business's. A lot of times we see this interaction between your personal money and your business's money with brand new business owners. And it makes things a little difficult to think about because you think, man, if my business is doing $100,000, $200,000 a year, I'm doing great. But unfortunately, your business has expenses, and they're things that aren't for your personal life, they're for your business. And that's why you need a distinction between your business's cash and your cash. And they should be different. So at the very core of separating your business's finance from your personal, you need a separate bank account. You need 2 bank accounts. You need one for your business and you need one for your personal life. If you have more than that, that's great. But at the very least, you need separation. The reason for this is so that there's some separation. There's not commingling of what's business and what's personal. As you grow, it can become really complicated to untie those things, and it's just not a good practice. So that often means that you need to work with an accountant or a bookkeeper to help keep things in order for your business, just as you should be doing for your personal side of things. You typically have a third party because your business is a lot more complicated than your personal life is going to be, at least for the beginning. And that brings me to my next point. And this is a bit of a claim that some people aren't gonna like. But I think that your business should not be the bank account that you draw from when you need more money in your personal life.
But Jeremy, I've spent all of my life trying to build up my business. The money is mine. It flows through directly to my personal taxes. I can do whatever I want with it.
Here are the problems that I see from a lot of business owners that pull money from their business account to fund their personal lifestyles. As you begin to make more money and the business becomes more successful, you begin to experience lifestyle inflation, which means that your lifestyle gets more and more expensive or lavish or whatever the adjective you want to use to describe that the amount of money you're spending increases because you're making more. And when that money is so easily accessible, it's just one transfer away from being in your personal account, it can get really dangerous. You can start pulling a lot of money out of the business and end up having not enough to actually keep the business running. It's much better to actually plan what you're going to take out ahead of time. Is it just from profit? Are you taking a loan? How are you doing this from a financial perspective, and where is it going on the personal side of things? The other mistake that I see a lot of business owners making when it comes to managing their money between the personal side and the business side of things is that they don't plan how much they want their business to grow. If you just started your business as a hobby and you're making a couple $1,000s a year, that's fantastic. You should absolutely take that money and you should do whatever you want with it. But if you're trying to create a business that grows and expands and hires employees and creates new territories and acquires new businesses or whatever it is that you're trying to do with your business, you cannot think of it as your own money.
Totally unrelated meme break. Totally unrelated meme break.
As the owner, you're responsible for sales and marketing and growth and accounting and all of the other things that come with growing a business that is bigger than just yourself. You have to be thinking, what can the business afford, not what you personally can afford. So when you're searching for new vendors or new software or new people to hire, it's not about how much can I personally afford to pay them. It's about what is the business going to receive in terms of value. Understanding your business's finances is a game about understanding the value that you're providing in exchange for the capital that you're expending. And there is no value for the business from you personally taking money out of the company. That is all only personal benefit. If you're only thinking about yourself, you're never going to be able to grow this thing with other people. So if you're building a business right now, stop thinking about the profit that you're going to take out within 1 year or 2 years. Think long term. Think about the foundation that you're laying now, the money that you need to deploy now in order to get you to where you want to be in 5 years or 10 years or way down the line. Don't think in terms of yourself. Think in terms of what you're building. And if in a couple years, when you actually make a profit, when you feel good about where you're headed, when things are going well, the team is taken care of, everything is going great, you can start to pay yourself back a little bit for the time and sweat equity that you put in. Because ultimately, like I said, in most cases, the money is yours and it's up to you what you want to do with it. But I think at the end of the day, if you can convince yourself that that money in your business account is not yours, you're gonna be a lot better off. And that's all I got for you today. See you next time on NGMI. Mwah! I got a secret to tell you. You ready? I'm doing great. I mean, that's just like not the full truth. Philosophically, I'm doing great. Okay, listen, it's not true.